Good morning, Shivkumar here, yet another edition of Commodities and Trading Roundup on January 21st, 2014, Tuesday. Yesterday, January 20th, was Martin Luther King's Day in the US and the markets were shut. Hence, there was no volumes, there was no movement, and it's as good as a week is beginning just today. We have posted all our weekly calls on our website and blogs, website at www.akshayaship.com and our various blogs. We urge you to go through the same and subscribe to our Facebook presentations also at facebook.com/lotusadvisoryservices.in. Now I talk about the individual groups as such. First we talk about the Nifty. Nifty is consolidating and trading above the 6300 mark for the past couple of days. After the initial sell-off on Friday, markets stay consolidated and traded well above and closed above the 6300 mark. Now the trading zone is expected to be in the range of 6240 to 6340. A break below 6240 could test next support of 6180. Above 6340 we have intermediate resistances at the 6360 to 6370, above which it could test the life high of 6415, where fresh selling could come. Overall, the markets are on an uptrend as we've been telling for the past few weeks, and minor corrections are taking along the way. So during a narrow range as such, it is very difficult to trade the market, and hence stock-specific calls are preferred over the Nifty at this point of time. Infra and IT are the stocks that we need to focus on and buy on dips on selected counters, which we should be coming up with by tomorrow. Now the RBI credit policy is expected to be announced on January 28th, that is coming Tuesday, and hence markets would trade range bound, especially the rate sensitive counters, the banks, etc. Hence it's preferred to keep away from such counters at this point of time. Now as far as the Bank Nifty goes, the expected trading range is expected to be 10,800 to 11,200. CNX 90 IT has closed at well above the highs and is trading positive. All the IT majors are doing positive. Wait for corrections for fresh buys in all these counters. INR is expected to trade in the range of 61.3 to 62.3. Closed at around the 61.7 mark yesterday, consolidating for the past couple of months at these levels. No major appreciation is expected to take place except on a break below the 60 mark, which is not expected at this point of time. On the higher side, support is seen at 63, which also is not expected to be broken. Markets are now watching for the RBI credit policy for the next move. Whether any rate reduction is likely to come up is a question mark that remains to be answered next Tuesday. Now, as far as the individual commodities are concerned, we talk about the bullions first. First, gold is now trading at around the 1252 mark. As per our weekly call, we have given buys about 1250. Add further buys at around the 1246 mark with stop losses below $1240 for targets of 1264 and 1270. We don't expect a major upside above these levels. Markets could consolidate, but so long as it remains above the 1250 mark, it is in a positive zone. Weakness only below the $1240 mark. On the MCX, trading at around the 29,300 mark. Support is seen at 29,100 and looks to test the resistances of 29,400 to 29,550 in the sessions to come. Silver is now trading at around the 20.20 mark. Now, overall, although it's been consolidating and trading positive for the past couple of days at around the 45,000 mark on the MCX, major positive will come only if sustains and closes about $20.50 on the international markets. One can enter fresh buys above $20.50 and further buys at 20.3 with stop losses below 19.8 for targets of 21, 21.3 and 21.5. On the MCX exchange, trading above the 45,000 mark, one can initiate buys at current levels of around the 45,000, add further buys at around the 44,800 with stop losses below 44,300 for targets of 45,600 and 46,000. Now, a close and consolidation above the 46,000 mark would take it to new highs of 46,500 to 47,000. So long as it remains around the 45,000 mark, it is trading sideways, but overall buy on dips is the strategy. Now, if it closes on the international markets about 20.5, one can enter longs as per levels that I have given just now. The next commodity is the energy complex. We talk about crude. Crude is now consolidating at around the $93.5 to $94 mark. As far as we are concerned, we prefer to wait and watch and prefer sell on rises as of now. The February contract as of yesterday closed at around the 58.18 mark. Strong support is now seen at 5800 and resistance at 58.50. Now, next positive upside would be only on a close of around above 58.70. Else below 5800 could test support of 57.50 and 5700. Now, wait and watch would be the approach as trading yesterday in the right range of 5800 to 58.50. Breakout either side to decide the next move. Natural gas, after the last 1 month of hitting fresh highs of even up to 283, now trading at around the 263 mark. In a weekly call, we had given sells at around 265, add further sells at 268 with stop losses about 271 for targets of 260, 258 and 256. Now, strong support is seen at 260 mark. A break below 260 could test the targets that we have given of 258 and 256. But overall, on a positional basis, we are bullish on this commodity. As and when any dips come at the targets or supports that we have mentioned, fresh buys could be initiated for positional targets back to again the 265 to 270 mark. But of course, 278 is a key level that could be watched out on any moves upside. A break above 278 could test 290 levels on a positional basis. Base metals have been trading extremely sideways for the past few trading sessions. Copper yesterday was trading in a range of 457 to 459. 462.5 is a very strong resistance. Next major upside on a break above 462.5. Support is seen at 454. Our weekly call, we have given buys above 462.5. Add further buys at 465 to 466 at 459, sorry, with stop losses below 454 for targets up to 470 to 472. Now, so long as 462.5 does not get taken out, likely to trade in a range of 455 to 460, where it's strictly in a no trading zone and no fresh opportunities could be had. Or break below 453 to 454 could test the next downside of 451, which is a major positional support on the DMA basis. A break below 451 could test 448, but as of now we see a tight trading range of only between 454 to 462. Either side breaks out could be the next opportunity to enter trades. Nickel yesterday tested a low of 885, closed at around the 890 mark. As per our weekly call, we have given buys only above 900, add further buys at 895 with stop losses below 886 for targets of 950, 925 and 930. Now trading at closed at around the 890 to 891 mark. Wait for fresh entries, buy on dips closer to supports at around 886 to 888 with stops below 880, or wait for break above 900 for entering fresh trades in this counter. Zinc is trading at around the 128 mark. Fresh buys can be initiated on a break and close above 128.75 with stop losses below 127 for targets of 130, 131 and 132. Yesterday it traded in a tight range of around the 128 mark but was unable to break above the resistance of 128.75. Now trading in a range of 127.30 to 128.75. Breakout either side to decide the next move. Lead is now trading at around the 135 mark. So long as it remains above 135, it remains mild positive. Support at 134 and resistance at 136.30. Aluminium initially tested the resistance of 110, closed at around the 109.10, 109.20 mark. Support is at 108.50. Again, a close above 110 could test levels of 111 to 111.80 in the sessions to come. Overall, as I have said earlier, today could be taken as the first trading day of the week as COMEX was closed yesterday. Let the markets consolidate in the first 2 hours for entering into fresh trades in the market. All our live updates would be posted on our website www.akshayashiv.com. We urge you to subscribe to our YouTube presentations and follow the levels that I have given just now. Have a safe and profitable trading day. Thank you.